What's up everyone? Welcome back to the channel. Today we're answering the big question: how do down payments work? And more importantly, how much do you actually need for different types of loans? Spoiler alert, it's not as scary as you think. Alright, so what exactly is a down payment? Think of it like your first contribution when buying a home. It's the money you have available up front to show that you're serious. The rest? Well, that's where your friendly lender steps in with a mortgage. For example, if you're buying a house for, let's say, $300,000 and you've got a 10% down payment saved up, that means you're putting down $30,000 and borrowing the remaining $270,000. Pretty simple, right? I know, maybe too simple.
Nice.
So why should you care about a bigger down payment? Let me give you 3 solid reasons. Number 1, lower monthly payments. The more you put down, the less you have to fork over each month. It's like switching from that all-inclusive streaming package to the basic monthly subscription. Trust me, your future you will thank you.
Thank you, thank you, thank you.
Number 2, better interest rates. Lenders love it when you put more down. Why? Because it lowers our risk, which means you'll get a better interest rate as a result. We all love a good deal, right? And lastly, number 3, avoiding PMI, private mortgage insurance. PMI. The thing you have to pay if you put down less than 20% on a conventional loan. No one loves PMI.
I hate it!
It's like the cover charge you never asked for. Now, if you can drop 20%, congratulations. You've just leveled up and unlocked the no PMI perk. This is definitely not the normal. If you don't have it, don't worry. Most buyers don't. So let's talk about all of your options. That's where different loan types come in. Let's break it down. And don't worry, some options require way less upfront. All right, now we're getting to the good stuff. Not all loans are created equal, and the amount you need for a down payment depends on the type of loan you're going for. First up, the good old conventional loan. If you're a first-time homebuyer and not purchasing a condominium, you only need 3% down. That's right, 3%. However, if you're not a first-time homebuyer, the down payment requirement will be 5%. This loan is perfectly suited for buyers with strong, stable income and a good credit history. The biggest advantage of a conventional loan is that you will save money in overall costs. They typically have higher loan limits and greater flexibility when removing PMI. This could save you a lot of money in the long term. Next, let's talk about FHA loans, the saving grace for many first-time homebuyers. The minimum down payment here is just 3.5%. Yep, even if your credit score isn't perfect, you could be looking at a $300,000 home with just $10,500 down. But, and it's a big but, FHA loans come with MIP, Mortgage Insurance Premium. This sticks around for the life of the loan, even if you put more than 20% down. So it's something to keep in mind. And lastly, my favorite, the VA loan. Veterans, this one's for you. 0% down. That's right, no down payment required. And here's another kicker, no PMI either. The only thing you have to think about is the VA funding fee, if you're not exempt, but that's actually way lower than PMI and it can even be financed or rolled into the loan. So if you've served, this is almost always the best loan option out there. And one other product worth mentioning, if you're thinking about living outside the hustle and bustle, like in more rural areas, you might qualify for a USDA loan from the US Department of Agriculture. And guess what? That's another 0 down payment option. The USDA loan comes with a guarantee fee of 1%, which can be similarly financed, and a yearly fee synonymous with the PMI, but still, 0 down. The catch is that there are income limits, and you have to buy in eligible rural areas. But if you qualify, it's an incredible deal. So now that we've covered all the options, you might be asking, how do I know which one's right for me? Great question. Your loan product, as well as your interest rate, is not just one size fits all. It depends on your credit score, how much you've saved, whether you're a veteran, and where you're looking to buy. And that's why it's super important to talk to a lender before you start your home search. They'll help you figure out what you qualify for, how much you'll need for your down payment. I promise, it makes the process way less stressful. All right, let's recap. Down payments vary depending on the loan. You can go as low as 3% for conventional, 3.5% for FHA, and even 0 down for VA and USDA loans. The key is knowing your options, planning ahead, and making sure you have the right loan that fits your financial situation. Easy peasy, right?
Easy peasy.
Keep in mind there are all kinds of other loan products out there for real estate investors and or people to expand their portfolio. These are the main products available for your everyday home buyer. If you found this video helpful, follow me for more tips on home buying, loans, and all things real estate. And as always, drop any questions in the comments below. I love hearing from y'all. Thanks for watching, and I'll catch you on the next video.